It's your boy Doug. I want to do a video on how to buy the dip. So this is a common thing done amongst investors. Us as investors, we're always looking for opportunities to make money. And the way that you do that is you try to find a good deal. A stock that has been trading at a certain price for a while sells off. That means the company is going for a cheaper price. Now, if the fundamentals haven't changed, for example, Google doesn't get rid of its Google search, uh, then the company is probably still a good investment if it's going for a cheaper rate. So the company I'm talking about right now is Intel, ticker symbol INTC. It had an earnings report, and the earnings report was, I guess, obviously negative because as you can see, once the earnings report came out, it dropped. Now the company is still profitable. If you look right here, you can see that it was estimated $1.11 per share, and actual return was $1.23. So the company beat earnings, but during the earnings report, there must have been some type of catalyst news that scared investors off, and therefore dropped the whopping. Let's see, went as low as $49.50, and from its high, that's around 25%. That's remarkable. Now, is this company worth 25% less? I would say no. I'm not too familiar with exactly what happened. We can look and see that Intel's manufacturing delay has investors thinking twice about chip stock. Okay, so there's going to be a delay, but it's not completely gone. This is a stock that's in the S&P 500. The S&P has strict guidelines on stocks that are that it lets in. Now, don't get me wrong, this stock may never recover. That's why you're an investor, because you feel like it might recover, but it might go from price point now and continue to drop. That's why you have to wait for signs that tell you that it is recovering. And I'm sure you guys have clicked on this video to find out what those are. So let me tell you. What I look for is the massive drop, the sell-off, and then we look for consolidation. Now this has to consolidate for a while for me, or it may not consolidate for a while. It may begin to trend up. I won't necessarily get in while it's trending up. I'll wait for a pullback. And if that pullback, once it begins to make higher highs, then I'm more comfortable taking a position because now it's beginning to trend up. So as you can see, there was a sell-off. And then at 49.50, that's when people began to find value in it because there's more purchasing power. Don't get me wrong, in order for this to sell, people have to buy. So there are people that are buying all through this downtrend. But the demand is not reaching the supply. So the supply is not reaching the demand. I don't know however you say it. So therefore, the price continues to drop. And once there's enough buyers, as far as what the price is, then the price begins to go in the opposite direction. Now me, for swing trading, I'm one to buy into good companies and hold until I see a profit. However long that takes. I don't sell for a loss. And so far that strategy has worked for me. I've even averaged down my cost, and I just hold on until I'm in the green. Then once I'm in the green, I tend to start selling. So, I've held positions for several months. Yeah, that's a long time to hold a position, but hey, I'm here to make money and I'm not using the money for anything else, so be it. So what you want to look for is the sell-off and then the consolidation. Now, with this will typically be a swing trade. You want to see it begin to make higher highs. And then once it begins to make higher highs, if you have a price point, I said a price point, if you have an amount that you're willing to invest, like let's say you want to put in $5,000 in this position, you could do it $1,000 at a time and average up. And then also put your stop losses in place just in case it begins to go in a different direction. Because there's already been quite a bit of purchasing with this as far as in a profitable sector. All the purchasing up here is irrelevant unless these individuals are averaging down. And then they got their price point down here at $49.50, which I doubt because it was only here for 2 candles. So you really couldn't get it at that much. So let's see, zoom in. So yeah, once it begins to consolidate, again, I reiterate, it consolidates and then it begins to make higher highs, which it seems like it's doing. This candle, the low is 50.52, 50.46, 50.62, 50.27, and then 50.43, 50.85, 50.60. So you just have to do the math on your own. Look at the prices on your own and see when it begins to make higher highs. At this point, you want to use indicators like the MACD. The MACD will show you that, somewhat of an uptrend is forming or in the process of forming. Remember, it's an indicator. It only reacts to what has happened. It's not going to tell you when you should buy or when you should sell. But the way that the MACD works, I like to see it going from bright red, that's the sell-off, to darker red to green. The RSI says it's oversold, which is also a good indicator. And then you want to look at time and sales. If it's more so in the green, that means people are buying. And the red, people are selling. But before all that, you want to look at the price action. Price action is pretty much the #1 indication of what's going on. Right now, it is still consolidating. You want to see it trending above the EMA line. Right now the EMA line is acting as we'll say a resistance. Acting as resistance. But once it's comfortably acting as a support where it's holding, the price is holding above the EMA line, then I would say you could be more comfortable taking a position. And as it trends up and you're in the profit, you hold. And then once it starts to show you signs of a resistance, you sell a little bit at a time, or you can get out of your position completely, depending on how comfortable you feel or what your price target is. This potentially, from this price point right now, $50.99, has a return of around 20+%. So, just to recap, the sell-off occurred, it's consolidating. We're waiting for confirmation. Confirmation is when it begins to trade above the EMA line. And then it's using the EMA line. Confirmation is when it begins to trade above the EMA line. It's using the EMA line as a support. It's making higher highs. And then that's where you want to take your position. That's the area of highest probability to be profitable. But remember, nothing is guaranteed. it can go the other way. It just depends on, what people are feeling about the company. Hopefully this video was informative. If you have any more questions, put them in the comment section below. Like, share, subscribe. Thank you. And y'all have a nice day.